But at the moment, guys, playing this 30-minute squeeze on Salesforce, looking for a move towards the previous all-time high. So let me just, before we jump into our stream. All right, one of you guys can answer a question, right? This is a small position trade. Again, that's relative. You know, if we break through all-time highs here, guys, probably looking at about, maybe $1,000 of profit. All right, we're up about 590 right now. So we're talking maybe a $400 or $500 difference. Lock it in. I want to make sure you guys don't catch yourself slipping doing this crap, because I used to do this all the time, right? It's called being a dick for a tick. Really going to hold this thing for a couple more cents, right? Lock in those gains, guys. So let me go ahead and do that, and then we're going to jump in. But that was just a nice little 30-minute squeeze, guys, and got a couple of these 260s here. Got two of them at 1220. They're at about 1542 right now. So let me get those off the table. All right. In case you guys haven't noticed, I like squeezes. But guys, I want to ask you all a question. All right. Where's the big money going today? And I don't mean individual stock wise, I just mean sector wise. Where have you guys kind of noticed the big money's going today? Interested to see y'all's thoughts. There we go. That is the answer. That is the answer. So let's do our bird's eye view, guys. Technology sector. Nothing happening here. Now, we can look at all the ups and the downs, right? And you had a whole big shit show today. But nothing happened. All said and done, guys, we're flat. So after a big day yesterday, we're not getting that day two love here for technology. All right. How about those semiconductors? Down about 1.5%. Right? How about industrials? Up about 0.5%, right? So that's not crazy. How about energy? Right? Energy's flat, nothing crazy there. How about transportation, which is IYT? Not a bad day, right? Just about 1%. And then there's the financials, guys, up 2%. So this has just been a big rotation week, right? As you guys know, they're coming out of tech on Monday into finance, just back and forth, back and forth. My thoughts on the market right now, guys, is that I'm going to approach this market as if we're on borrowed time concerning this rally, right? So we kind of get rid of everything here but the 21 EMA. And I know you guys who've been in the group for a while are familiar with it. But that's my mindset. Maybe we continue to run, guys, for another week, 2 weeks, 3 weeks. But as far as risk management goes and the current, the trades I'm looking for, my mindset is that any day now, we can quickly start getting that reversion to the mean. Maybe it doesn't happen for a week, 2 weeks. Maybe we just keep going up all year. But at some point soon, guys, we've got to expect a nice, healthy reset, right? All the names that have been leading the way here, the NVIDIAs, the Teslas, the Amazons, the Googles, the Facebooks, the Apples, the Microsofts, they're just so freaking cooked and extended right now. They can keep going. But what I want to do here, team, is protect all the gains. So I'm approaching the market, right, from a risk management standpoint, expecting any day now for us to start getting flushed back down towards that 21 EMA. And not just in tech names, guys, but really in everything. Because we look at the S&P 500 here, in all year long, after we bottomed out in April, it's respected this nice trend. We run away from the 21 EMA, we come on home. Back and forth, back and forth, back and forth. But look what happens, team, right? When we just kind of run and run and run and run and run, right? We come back home very quickly. A lot of times we can wipe away 1, 2, 3, 4, 5, 6, 7, 8. A good week of price action can get wiped out in just a couple of sessions. The last thing I want to be doing right now, guys, right? Because we've had fun with Amazon. We've had fun with Google, with Tesla. We've had a lot of fun here over the last couple of weeks. Why have we had fun? Because we came out of a reversion to the mean. The last couple of weeks have been awesome here, guys. All this momentum, Amazon crazy, Apple, Facebook, right? We're having a blast here because we got that nice healthy reset. And we keep going, we keep going, we keep going. The last thing I want to do, guys, is keep getting super aggressive. Keep trying to swing trade and then wake up one morning and that reversion to the mean is happening and I'm letting go of so many of those profits. So not only am I scaling down a bit in position size, I'm not really looking for swing trades right now. I'll give you guys my trades here this week, just a couple of them. You look at Tesla this morning. And granted, right, not my preferred style of trading, but I'm basically trading nothing but squeezes, guys, on lower time frames. And then doing a couple other trades, with Chandler's assistance, who's a great day trader. I'll swing trade Tesla and I'll get nice and, and fat in that position when we're coming out of the squeeze. But once that's happened, guys, right, I'm just looking to sneak in, milk the continuation, and then get the heck out of there before anything gets weird, right? So this morning, taking the breakout above the 2200 level, and that trade, guys, was good for $2,000, right? I'm looking at things like CRM, explodes, gives us a beautiful 31-hour squeeze. Let me sneak in there and hit that for a nice little push to all-time highs. And it looks like, did she hit all-time high here? Not quite. But these are the kinds of trades I'm looking for. We have a lot of momentum right now. I'm a little bit, cautious, guys, that we could lose it any day now, but I'll keep playing these lower time frames, right, where I don't really got to hold overnight and just keep catching the momentum, right? So we find Salesforce, really strong move, 30-minute squeeze, taking a break in the action there. So coming here today, guys, hit that $700, right? Things like FSLY, right? Pumping as of late, comes into the session in an hourly squeeze, right? I'll hit that and then get the hell out of there, right? So come in there today and I'm taking my $400 or $500. Yesterday on Amazon, the last friggin' thing I want to do right now is go to bed swinging Amazon. I know she can continue to run. At the same time, guys, I know that I'm not going to be the fool who wakes up next week, a week from now, and is just in total disbelief that a stock actually came down. But as we get extended, you've got to start getting ready for that. So do I want to swing trade some giant Amazon position right now? Maybe with a put credit spread, but definitely not with naked calls. So how do I continue to make money in this environment? I'm a swing trader. I'm looking for my go-to setups on those lower time frames. So no interest in swing trading something like Amazon, but give me a 30-minute squeeze like yesterday. I'll come in, give me my modest little piece of that, and then I'm getting the heck out of there. So those are the things I'm continuing to look for, guys. I prefer the bigger swings, but I like taking swing trade entries when stocks are near their 21 EMA. So if that's what I'm trying to work with, then your buddy's list here is a little bit dry. Amazon, nowhere near it, right? Both of the indexes, nowhere near it. Tesla, who is just popping again, right? None of these leading names, guys, are anywhere near that 21. So I got to play with the market's giving me. I'm doing those lower time frame squeezes, and it's been a fun week doing that. But the major thing, guys, I wanted to get together and talk about, what can we kind of focus on here, right? We know we can keep pumping. We know any day now we can start a reversal. What are some things we can kind of look for outside of price action that might give us a heads up that maybe we are coming back in? Right? And for a little bit of context, guys, just think about kind of the stage of the market we're in right now. We're in that stage where the market's been pumping and pumping and pumping and pumping. And you got a lot of retail traders right now, guys, falling into complacency, right? Pumping on euphoria. Just kind of losing sight of reality. Then we get an ugly ass flush, right? And then again, and then an ugly flush, right? And then the market pulls you back in again to thinking, this is an easy game. Buy a tech stock, buy something, and you making some money. And then it comes down. So The major thing, guys, I think we should look for here, especially because this baby's been popping just a little bit over the last couple of days, is this volatility index. So y'all who've been in the group, you've seen us go through this example before, but the VIX, guys, right? This is basically our panic and our fear index, right? Best way to kind of describe it is that when VIX is spiking aggressively, expect shit in the market to maybe get a little bit ugly. But without even understanding what VIX is, just look at the price action, guys, and just kind of, let this sink in, and maybe even go back and do this tonight a second time just to kind of really let it sink in. But I want you to look at a couple of the moves here, right? And actually, to make this even better, I want to get 2 charts up, and then let's do that. And it looks like things are rolling over a little bit into the close. See if there's anything we got to talk about. Bunch of chop. Back to the lesson. All right, I just want 2 charts open. And then we'll do this quick example. We're going to run a scan, and then I'm going to let you guys get some rest. But check this out, guys. So we're going to get a daily chart over here of the volatility index. So let's get that all set up. We don't need anything but the 21. And then we're going to come over here and get a daily chart of the S&P 500. SPY. Daily, and our 21 EMA. All right, perfect. So can you guys see both of these charts like good enough? All right, awesome. All right, so again, guys, with the context, right, that the VIX is our fear, our panic index, right? Basically, our money wants to get out of stocks index. Check this out, right? So look at the S&P 500 back in early April, right? Again, guys, we kind of find ourselves in the market where we're just pumping, right? Every day we're going higher. Every dip is getting bought up. Easy money, so to say, right? Look what happens over here in volatility, right? On April 17th, volatility begins to spike pretty aggressively, guys, for 3 days in a row. So the fear, the panic index for 3 days in a row begins to spike, starting on April 17th. After a very nice move to the upside, the S&P 500 begins to pull back for 1, 2, 3 days. Pulls right back to that 21 EMA, starting on April 17th, right? After that little short-lived kind of spike there in volatility, guys, think of VIX almost like a big nasty storm cloud. Once the sky kind of clears, it's safe to come out and play again. So after the 3-day spike of volatility, look what happens starting on the 22nd. Immediately, the fear, the panic leaves the market. Immediately, the S&P 500, the market, continues its rally, right? And again, we go back into a market where every day we're going higher. Every dip is getting bought. Then we come here, guys, to the end of April. Again, you get a sudden, big-time 3-day spike in volatility. What does that cause the market to do? Reversion to the mean, back down to the 21. Again, the sky is clear, and the market continues on its merry way. Again, right? You look right here, we get a big spike in volatility. We get a big drop in the market. But as soon as volatility begins to disappear, what happens? We continue the trend. So keep an eye on this potentially, guys, over the next couple of days. The last time we really got a decent, call it, drop down to the 21 here for the SPY was end of July. And you can see the end of July, a little bit of volatility coming in. So given the fact we're so extended right now, I think keeping an eye on volatility is very important, guys. If we, tomorrow, over the next few days, begin to see just consistent day after day of volatility spiking higher and higher, maybe we get the same picture here. Maybe the market gets shaken up. Everybody gets freaked out, right? People start getting bearish for no reason. And then volatility dies down again. and we can go back on our merry way, right? And the best example, guys, of the role that volatility plays is the very beginning here of this crazy ass rally. Right? Look what happens to volatility once coronavirus becomes a thing, right? Just every day. So for future reference, guys, if we ever get another pandemic, don't buy the dip until the sky's clear, right? From end of, call it February, right into kind of, guys, mid-March. If you try buying dips, you're getting blown out of the water. But look what happens when the sky starts to clear, right? When volatility, instead of continuing to go higher and higher every day, begins to go lower and lower every day, right? Use the cloud analogy. All of a sudden, and this is the most important thing, guys, in the face of a pandemic, in the face of, record unemployment, people not having jobs, all the crazy shit going on in this country and around the world, in the face of all of that, right? The news not getting any better, arguably getting worse. The fear and the panic left the market. This is the reality, guys, of trading. Coronavirus did not get better, right? Our economy did not get better, right? Social things in our country here in the States did not get better. Nothing has really gotten better in 2020. But right towards the end of March, the truth is, guys, that the big money of the market stopped giving a shit. They no longer gave a crap about Corona. They didn't give a shit about unemployment. They don't give a shit about social unrest. The fear and the panic begins to significantly leave in a major fashion. And on a big picture scale, guys, has continued to do nothing but go lower and lower and lower. What has our market done since the tail end of March, once the sky started to clear? It's safe to come out and play again. Those, to me, guys, are the two most important charts of 2020. The role that volatility plays in just the cold, hard truth that news, economy, right? Jobs, all these things that the news promotes, the big money just doesn't care. Coronavirus hasn't gotten better. Nothing in this country of ours has gotten better. But look at our market. Big money stopped caring. Big money was, done being afraid to jump into the stock market coming into April. Now, if you're buying into the news, guys, right? You know what you're sitting here waiting for 3-4 months? You're waiting for that dump to the lows that never happens. It never happens because the big money isn't afraid anymore. So to me, those are the most important charts of this year. This puts everything, guys, into a good context. As we trade the next 5, 10, 15, 20, hopefully more years, we need to remember this always. News, craziness in the country, people out of jobs, an entire pandemic, it's only going to keep the market down to the extent that the big money cares. I think those are awesome charts. So that is volatility, guys, on a big scale as we go through the next couple of days or weeks here, as we are, right? You can make any argument you want. We're technically super extended. Let's keep this in mind. In the event volatility begins to spike, very likely, guys, we come on down here a bit. And then, let's also keep a close eye here on technology. Nothing's going to pull this market down quicker than the leading sectors, technology and the semis here. And the semis are actually not as extended, so it's technology's fault. Hopefully that all makes sense, guys. But I think right now we keep an eye on volatility, and then every day we try to answer that big question, where's the money going? We'll stay out of trouble, and we'll make some good money when there's money to be made. So let's look around the board real quick, guys, see how things ended today. Real quick, one more time. Tech, dead in the water, nothing. Energy, dead in the water. Industrials, nothing. Utilities, nothing. Financials, right? Best sector today, coming in a little bit into the close, but nonetheless. So that gives the S&P 500 0.25% to the upside. That gives the Qs down about 0.5%. Apple down 1, Amazon down 1, Google down 1, Netflix down 4, NVIDIA down 1, and Tesla up 4. So guys, I'm gonna keep running scans every morning, every night, looking for squeezes and strong stocks. I'll keep taking those squeezes until they stop working, but my preference would be a pullback here. Whether we get that or not, time will tell. So going into the close here today, guys, nothing open at the moment. That's what I closed up today. CRM, whatever that is, FSLY. Firstly, Tesla. And now let's run a scan, see if we got anything cooking for tomorrow. And we shall see. So I'm not interested in any daily squeezes right now. We do got a couple of beauties in the 4-hour that I want to show you guys. Apple, NVIDIA, Square. Sound good? So we need one chart only. So we'll start with Square here, guys, because I know a handful of y'all have been looking at this puppy. So let's get SQ up. So you can see it did try here this morning, right? Kind of coming back in. I'm not sure if that was during the actual session or pre-market. Let me see. 9 a.m. So it did try today, guys. Came right back in. Technically, the 4-hour squeeze is still valid right underneath all-time highs. So when you look at Square here, and, you know, it's just kind of continuing this trend. If you're looking for, again, continuation plays, not the worst candidate. I do like, again, guys, not for, you know, I'm holding this thing for 3 weeks. More so, you know, let me get a piece of some momentum here. Apple going into a 4-hour squeeze. Now, maybe this means Apple just freaking chops forever. Right? Look what happened in the last 4-hour squeeze. This thing did nothing for about 3 days until finally. So not a bad looking setup there, guys. And then you got big NVIDIA over here in a nice 4-hour squeeze as well. See what we got for the 2-hour NVIDIA. So we don't got to look at NVIDIA. It's just squeezing everywhere. And then we'll stop here, guys, with the hourly, and that'll be it. Hourly squeezes Visa, NVIDIA again. Zoom's got earnings on Monday. And we'll see what's left on the list tomorrow morning, guys. So I'm pretty wiped, but I am looking forward to seeing what the futures do here in just a couple of hours. And so we got to upgrade for SQ to 230s. Jeez. Underneath all-time highs, 4-hour squeeze. You got a catalyst hanging above its head. You know, if you guys are interested in trading that one, and I'm glad you said this, you know, keep an eye on that one tomorrow, guys, for maybe some more upgrades. You know, what was kind of lacking here for this setup today was just a big day of momentum for the market. For some reason, we show up tomorrow, right, and we get Freaky Friday and things are going crazy, and SQ comes into the day with some more upgrades, and it's still in a 4-hour squeeze. Not a bad looking setup. Arvin, so I mainly like to look at ADD and tick, kind of out of the corner of my eye. So I look at ADD, I look at tick, and then, you know, I wouldn't say I look at volatility all day long or really all that often. More so just, you know, where I really start looking at volatility, guys, is, you know, when we're 2 weeks into just nothing but pure blitz towards the upside. And then I kind of got, you know, my own, I guess, call it internals, you know, which is what we do during the live streams, guys. You know, call it the follow the money internal. You know, we look at all the different sectors, look at all the leaders in those sectors, just trying to get a sense of, you know, what is Wall Street buying today? Load on the puts. To be honest, I'm not going to look to short. Now, granted, if, you know, let's just say, guys, we do, right, somehow end up here, you know, getting a nice kind of pullback, and whether it's to the 21 or not, right, let's just say we do get a nice reset for the market. You know, there's obviously going to be some crazy money to be made on the downside, just like the upside. You know, sometimes even more on the downside, because oftentimes, guys, puts are going to gain a lot more value. So that's a good question, but here's my mindset. You know, a pullback, guys, can kind of serve as one of two things. It can serve as a trade opportunity, where you're looking to play that downward trade, right? You're looking to short that market. For me, the pullback more so serves as, the next coming set of opportunities, so when the Qs begin to kind of pull back here, and again, guys, this is, personal preference. Chandler kills it when we fade like this. A lot of you guys and girls in the group do. Me personally, when I see the market coming in like this, right, I'm sitting on my hands and I'm starting to drool because I know, man, if we can come on down towards that 21 and then I see signs that things are holding up, there's my pitch, right? I see the market coming in rather than short it, right? I'm sitting there ready, arms wide open. And if I see what I want to see, which is us holding up near that 21, right? Big money starts flowing back into tech. Volatility is dropping. We got options flow, yada, yada. In this market, I'm using any pullbacks, not as an opportunity to trade the pullback itself, more so for, a new set of opportunities to come. And, as far as that kind of swing trading strategy, guys, waiting for the market to come in and then just looking for the continuation, my mindset is I'm going to keep on doing it until it stops working. Been working pretty well this year, so that's my mindset. Let's go to Twitter, guys, and make sure we're not missing any news here before we wrap it up. But I did see a lot of you guys being disciplined today, in different ways. Some of you guys and girls didn't trade at all. Some of you guys cut losses small. Some of you guys took gains and got the heck out of there. See, Walter's going to bed. United Airlines says we'll need to involuntarily furlough up to 2,800 pilots in 2020 without an extension of U.S. aid. Furlough. I should know what furlough means, but I don't got enough shame. Let's see, furlough. Not furlouche, absence. They could have just said that. United Airlines says we'll need to involuntarily absence up to 2,800 pilots in 2020. Hey, good stuff on CRM. That was a beautiful setup. Beautiful setup. Squeezes, guys, they're not bad. Trump talking NBA. No need for that. Cudlow says Trump, TikTok. We'll see what tomorrow brings, guys. But I think we got a good focus right now. I'm going to keep on waiting for those lower time frame squeezes. But, I'm ready here. Maybe we keep running. Maybe we get a Friday dump. Who knows? The fun part is waiting and seeing. So do you guys got any open positions heading into tomorrow's session? I got none. At least I better have nothing. Let's make sure. All right. Restoration, hardware, put credit spread. What do you got for strikes? Furlough means that take leave. Ooh. And they said what, 2,800 pilots? Yikes. That sucks. Apple Iron Condor around 500 for tomorrow. So we looking at some, let's see. I actually like that a lot, right? So check out Apple here, guys. You look at the volume. Here we go. Yeah, you picked a good strike. So here's tomorrow's expiration options, guys, for Apple. When coming into Friday, you want to look, guys, where is the majority of the volume? And we want to look for what's known as max pain. You can buy calls, you can sell calls. For anybody, guys, who bought, look at all the volume here, right? For anybody who's buying these Apple calls that expire Friday, where would Apple have to close tomorrow? You gotta, You opened on July for Apple? Oh, okay. TECL. Nice. All right. But think of it tomorrow, guys, where would Apple have to close, for the most pain to be taken by people who got calls? Or, in other words, where would Apple have to close for a bunch of traders to have their calls go to zero, right? And look at all the volume here, guys, starting at 500, 67,000, 56,000, 78,000. So we can look at Apple here and say that there are a crazy amount of calls being held at the 500 strikes and higher. Now, maybe that's big money buying those calls. Based on today's price action, I'm doubtful. What's more likely, guys, is that the big money's been selling retail traders like us these calls all week long, all of last week, right? Last couple of months, just selling the crap out of these calls. So there's a big incentive, right? If I'm an institution and I've been selling, some knucklehead, just hundreds and thousands of dollars worth of 540 calls, 520s, 500s, there's a very big incentive for me tomorrow to see Apple close under 500. Because then all those options go to zero. And for those who sold somebody the option, they collect all that premium. So given how the market looked today and given all that volume there, I really like that iron condor. And you got that big psych level as well, right? That kind of can play a role too. Hassan, if you don't mind me asking, what was the the risk reward ratio on that? And why don't we, while he answers that, guys, why don't we kind of take a look at, what would be max pain tomorrow for a lot of our favorite names? And again, max pain just means, where would this thing have to close for, a bunch of calls that people have to go to worthless. You can see that'd be about 500 on Apple. Let's see. You got Facebook. Where would max pain be tomorrow for Facebook? So you look at the volume on the in the monies and then look at the volume, guys, on these out the monies here. 295s and on, you've got some crazy volume. So max pain for anybody holding calls on Facebook tomorrow would be a close under 290. And again, guys, anything can happen, right? But just to kind of drill this home before we hop off here, what this could imply, and again, we can gap down 2%, we can hit all-time highs, but just to be prepared for everything is better. What this could imply is a lot of chop tomorrow. If the institutions have been selling retail traders these calls and they want to see them go to zero, we closed at 293 today. This thing, guys, might just sit right a couple of bucks under 295 all day long, just torturing these poor people. Right? Have folks out there holding those 295 calls, and Facebook's just going to flirt with it all day long. In the money, out the money, in the money, out the money, just beating them down until finally they go to zero. So, based on where all the volume is, if that's what's going to happen tomorrow, Facebook's basically right there, right? Apple is basically right there. Let's see, Google. Max pain for Google would be, it's right there. 1630-ish. Max pain, we'll do Amazon and Tesla. Max pain for Amazon, guys. You start getting some crazy volume in here. So really would be, call it 3390-ish. So maybe we explode or dump tomorrow, but usually, guys, we get what the big money wants. If the big money just wants to collect some premium here, max pain for Tesla would be a close just under 2,200. So, we'll keep this in mind heading into tomorrow, and then something to take into consideration. $490, $495. Nice. So that must offer a pretty good risk reward, right, Hassan? That's pretty sweet. Okay, yeah, that's pretty sweet. Pretty sweet. So good work today, guys. We'll see what the market brings us tomorrow. But as always appreciate your time, guys. So rest up tonight, guys. Spend some time with your family, and I'll see y'all in the morning.